So I've been doing some work on interest rates, the 10-year bond yield. Now, this particular chart goes back quite a bit. This is the chart I always talk about, but I have changed the labeling. This is my new preferred count for the long-term pattern. And I thought I'd share it with you here, and so I can try and explain what's going on since 1981. So we can see here we had an initial move down, which to me, it could be an A wave, right? An A in brackets, which is the start of a zigzag. Then we had an A, B, C, D, E. And I think the E wave was the one that went up to 1981. And the reason for this change is because the patterns at the small degree, they weren't really adding up and making sense. And especially after going back and looking at the whole thing on the trading view chart, I started to realize that there's something else going on with this pattern. And so all the practicing I've done recently with identifying patterns just piqued my curiosity and I had to go have a look. So that means that the move down since 1981 isn't complete yet, right? If we're looking for something to be as long as the initial move down, this this isn't done yet. So whatever's going on now, whatever period of time we're in now, to me it's a weak five-wave move. And the way that that move is subdividing, it's very complex and choppy, and it's definitely not over yet. And it's really interesting how this is all starting to come together. So this is the count that I have here, right? Since the top of 1981, I believe the first move down was a zigzag wave one. Then we had an A, B, C, D, E for wave two. And then the wave three, I believe, is still currently in progress. And the only way that this count makes sense is if you look at this move since exactly the start of 2000 or thereabouts, 31st of Jan 2000 or mid Jan, whatever, you started to see this five-wave move down. Okay, so you see like a zigzag 1, 2, 3, 4, and then 5. So I believe what happened since then, if I just zoom in to this area, I believe this is actually a zigzag, right? And it's not a zigzag as in just A, B, C. The internals suggest that the B wave, internal B wave, was expanded. And you can see a C, D, E pattern right at the highs there. Now, I believe that the move down was a B wave. So it was an expanded B wave down due to basically what was happening during that time, the lead up to November 2019, and then obviously what happened during 2020. And then I believe what happened was we got a really sharp reaction back in wave C, and then a D, and then what I believe is now a weak five-wave move, right? So we have a zigzag 1, 2, a zigzag 3, 4, so alternation, a little bit of alternation, I suppose. But to me, I can see that the last move is happening now, which makes sense because if this is a zigzag wave 3, then we can't go above the beginning of this area right here, which is 6.8. Okay, because if this is a zigzag wave 3 with a weak five-wave move for wave A, then I think they're getting ready for something. Okay, I think that this is definitely reloading the chamber for what will probably be, in my opinion, a sharp move down, right? So this move will need to make a new low even below the March 2020 low, all right? Because that's get rid of that, because that's the rules of how these patterns work. So if that's the case, then this, it doesn't really, I don't think it really has far to go. Now this correction I don't think is complete yet, but I just drew in what I believe the zigzag, where it could end roughly. And I think it could go up to 5.6, somewhere about that, before we see probably what will more than likely be a sharp reversal at some point. Now, this will be interesting because that will mean that they're raising into a top of the Dow Jones, and that basically whatever's coming will require a lot of stimulus. Because if they have to reverse course all the way back down this far to complete the zigzag wave 3, well, what comes after that is probably going to be quite volatile in terms of interest rates, right? Because then we have to see a wave 4 and a 5 zigzags, which we don't know could extend lower, right? Depending on exactly what is going on and to the magnitude that they need to do this. By the time wave 3, 4, and 5 is finished, which we don't really know what that could look like the way that this pattern is evolving, right? You can see that it's definitely like expanding, right? It's expanding. So for this to be the type of move that basically keeps doing a lot of this, right? Eventually, something's going to give, and this thing will have to basically make a reversal higher, because that will be the end of the zigzag that started, 1100, roughly 1100 AD. So to me, that basically says a lot about the volatility that we're going to see over the next several decades in this ending pattern, which is getting more volatile as time goes on, right? And this is why I decided to just go back and check, because this count makes a hell of a lot more sense than the previous count, because this move to only go up this far, the way it's been progressing and the way that it looks like a weak 5 wave move, I thought this can't be right. This can't be the wave E that I thought it was before. So to me, this is now the likely scenario, which is probably going to explain a lot about what we're going to see, in the Dow Jones in terms of, you know, basically the next bull market. The stimulating that will need to go on here for the next bull market, and whatever happens next, it's kind of like, what kind of shock is gonna happen in this time period when this particular wave is ending soon. What kind of shock is going to send this down, which in my opinion will be probably a lot quicker than what we've seen even in 2020, right? So that there will definitely be some form of rescue for the market, but it'll also lead to a massive bounce. So the same kind of bounce that we've seen, since March 2020, the bounce up. I think it'll be something similar, but on a larger scale. So I've actually been listening to a couple of people that share the same view, that what they believe is going to happen um, is going to be pretty extreme, with one crash coming probably later this year, a massive bull run, and then something akin to you know a depression, basically. Now, if this next move isn't going to be the depression, then I really would like to see what that next move is going to be, because I think it's just going to get more volatile moving forward from this point. So looking at this a bit closer, if we have this channel going up from wave 2 to 4, when we get to this area, this is basically towards the end of the year, right? So we're looking at October, November or something in terms of potential breakdown out of this channel. So whatever happens is more than likely going to happen towards the end of this year. So there's still some time to basically, get ready for this, and anticipation for this move down. And because of the pattern, I think that, the current count for the Dow Jones is correct, and that we will see another high, all-time high, before this event takes place. So obviously, this is just my opinion based on the waves, and I'm not a financial advisor. So, just do your own research and use your own methods to hedge your risk. So that's it for this video. Thanks for watching.